Hi, welcome to Learnora, your learning lab. Treasury management is like being the financial superhero of a company. It's all about managing the company's money wisely and making sure there's enough cash on hand to keep things running smoothly. Think of it as balancing a checkbook, but on a much larger scale. Why is this important? Because businesses need money to operate. Treasury management ensures that companies have enough funds to pay their bills, invest in new opportunities, and weather any financial storms that may come their way. Without effective treasury management, companies risk running out of cash, missing out on profitable investments, or even facing bankruptcy. That's why having a strong treasury team is essential for any successful business. Treasury management covers a wide range of responsibilities, all related to managing a company's finances. Let's break down a few key areas. Cash management involves making sure the company has enough cash available to meet its day-to-day operational needs. This includes managing bank accounts, forecasting cash flows, and investing excess cash. Then there's foreign exchange risk. Companies that do business internationally deal with different currencies, and treasury teams help mitigate risks from fluctuating exchange rates, making sure that profits aren't wiped out by currency fluctuations. Debt management is another big one. Most companies use debt, like loans, to fund their operations. Treasury professionals manage this debt, making sure the company can meet its payment obligations and secure the most favorable interest rates. There are different levels of responsibility within a treasury department. Let's look at three common roles. First, the Treasury Analyst. This is the entry-level position, where analysts provide support to senior team members. Their responsibilities include preparing cash flow forecasts, analyzing investment opportunities, and generating financial reports. Next up is the Treasury Manager. Managers oversee the day-to-day operations of the Treasury Department. They develop and implement treasury policies, manage relationships with banks, and assess financial risks. Finally, the Treasury Director. Directors hold the highest position within the department. They set the strategic direction for treasury management, oversee all treasury activities, and advise senior management on financial matters. How do we know if a treasury team is doing a good job? By tracking key performance indicators, or KPIs. Here are some examples. For a treasury analyst, it's all about the accuracy of cash flow forecasts, the timeliness of reporting, and the identification of cost-saving opportunities. Treasury managers are measured by the effectiveness of risk management strategies, optimization of working capital, and the strength of bank relationships. And for treasury directors, it's the overall profitability and financial stability of the company, successful implementation of treasury strategies, and minimization of financial risks. For more interesting information, let's subscribe to Learnora, the Learning Lab.